Hi guys, it's Kristen and Andrew again, joining you from Altitude Advisory, keeping a little bit of social distance and coming to talk to you about tax planning this time. We've already covered off on a heap of COVID stuff, but this is tax planning time. So we wanted to tell you why, what and how about tax planning. So Andrew, why do we do tax planning?
So thanks, Kristen. Yeah, so tax planning, there's a number of reasons. One, it's coming obviously to the end of the financial year. And we talk a lot to our clients anyway about plans and strategies for the coming 12 months. Now, even though we're at the end, tax planning basically largely dictates what your tax payments are going to look like for the next 12 months. And given we're in the midst of COVID and we've had a lot of businesses that have been impacted from a negative cash flow perspective, mapping out and controlling cash flow for the next 12 months is probably more important than it's ever been. So, this year, even though it's different, it's sort of taken on a different type of importance.
Very good. So how do we do it? What do we do in tax planning? That's a common question that the clients that don't do this regularly ask.
So how we do it is we basically look at the year-to-date numbers. So we'll peg a line in the sand, whether it be 31st of March, 30th of April, get the real live data. We'll then sit down with the clients and do some forward projections to the 30th of June and come up with various scenarios.
Right.
And from there, we come back with different options as to, well, if that's not palatable, that level of tax isn't palatable, then what can we do about managing that? And how can we then vary tax instalments and whatever it might be to come up with the right solution for them?
Okay.
And so, it's a collaborative approach with the client to forecast their yearly profit.
Right, okay. So this year is going to be a little bit different.
It is.
Because of many reasons.
It is.
So what do you think the biggest issues this time of the year are?
Well, there's still a lot of businesses out there, Kristen, that are doing pretty well. There is businesses are well ahead of where they were 12 months ago, because, whether they be retailers, supermarkets, there's other, builders and trades that have been busier than they've ever been. On the other hand, there's obviously businesses that have been negatively impacted due to the shutdown and so forth. So in terms of the businesses that are, I'll call it flying along or business as usual, we still need to go through the normal process with them and look at what options we've got in terms of it be superannuation, using the $150,000 asset write-off or whatever it might be to manage tax and plan around that. For others that have been negatively impacted, if they get, the JobKeeper through the stimulus package, that's going to put taxable income back in the system that, 6 weeks ago we didn't think was going to be there. So that's still relevant, considering that, basically the goalposts have shifted.
Yeah, could be quite chunky for some of our clients.
Correct. Yeah. So, we've got some clients that will get, hundreds of thousands of dollars of wage reimbursement. And it's important that that gets managed as part of tax planning.
Yeah, very good. Yeah. So the $1,500 a fortnight will be taxable, but the PAYG cash boost?
Tax-free.
Okay, fantastic. Just a little tip there for people. Opportunities. What are you seeing as opportunities? We're always, as we spoke about, into strategy and planning for our clients. We want to make sure that people's structures are right at a time, but given that lots of things are changing and people are finding new innovative ways to work. Maybe they don't keep their workforce, maybe they do. What do you see as opportunities for clients?
Yeah, so look, there's a lot of things in place that fall into this tax planning period. One is obviously, how do we utilise that $150,000 write-off? How we can best deal with the JobKeeper side of things.
Yes.
With superannuation, we've seen investment markets go down. There could be opportunities there for clients to redeploy money into retirement savings or whatever it might be to do that. But the other big opportunity, I think, it gives business owners a chance to sit down and say, am I in the right business structure? Am I in the right investment structure? And if they are I'll call it in a downturn or a bit of a trough, there's potentially really good opportunities to restructure at this time for a longer term payoff.
Excellent.
And I think that's something really important, forward looking, that they take the opportunity to look at those type of things now as part of this exercise.
Excellent. It's also probably a prime opportunity to look for companies too in their Div 7A loans and dividend strategies
and
too.
like
Yeah, it could be opportunistic. Okay,
Correct.
good. So is there anything else that we need to let people know?
No, that's pretty much it. But I mean, the thing about it is, if we get to the 20th of June, it's too late.
Right.
We've only got another window of a month, really, till the end of May, early June, to get things in play. Otherwise, you're not going to have enough. People aren't going to have enough time to go and do stuff.
No, it's set in stone by then, but it does allow us, if we do it early enough, to get the timing and tax payments right for the coming 12 months.
Correct. So don't wait to the end. Get onto it now. Speak to Kristen. Speak to myself. Speak to your advisor. Get it involved, and get it dealt with.
Excellent. Thanks for the info.
Cool. Have a good day.
Bye.